All right, so going over the Bitcoin chart, we've had a pretty decent week. Not, extremely crazy price movement, 8%, which is good. We're not really consolidating towards the bottom where the support was at 34. You can see we wicked below that. But like I said on the last video, this was a reversal candle. But given the way this market structure was and that we had this short-term moving average going across this longer-term moving average, in the time, basically in the time frame that we're in within, this bull cycle, assuming that we are still in, say mid bull cycle for Bitcoin, you would have exited because the reason I'm saying this is because it's kind of similar to 2013. So like mid 2013 where we had a big pullback. That pullback was around 80%, not as aggressive as this one. This one was about 54%. Still an aggressive pullback, but you would have exited 75% if you wanted to, because we're still not out of the woods. We do have some good movement. There is some other indicators that are showing that, that potentially was the bottom, and we're going to start, going sideways to up, and then eventually once we break the previous high, this mid 60 area, then we can go ahead and start moving higher. And I think we'll do that probably, I said it could take 3 to 4 months. So, that was in May, June, July, August. So sometime August, September, maybe we're back in this upper area. We'll look at some other things and kind of see where we could be. But I said we would be out of the position waiting. We could miss. It was as much as I think 30% because we could get what we're looking at. Let's see, where's my lines? Yeah. So this was the breakdown area. We hit the target of the channel, and I said I thought that we would get back above. We would definitely retest the breakdown. And the reason I said that is we have some other indicators. The Ichimoku cloud here on the daily that shows that there's a cross. And price action, sometimes it goes into the cross. And given the structure that we had, I thought that maybe we would go into the cross, and that would be sometime around July 17th. And that would be an area where we would test the breakdown. And then maybe we would come back. The breakdown is right around, say, 46 to 44,000. We could get there and then come back down, consolidate, and then we would see what happens. But so that's what I'm thinking. That's my outlook, that we're going to retest this breakdown by the 17th. So today is the 2nd, or the 3rd. So within, 2 weeks, I think we'll be back to this area. We do have some areas to retest here. Let's see, what else did I want to review? So yeah, so we're just waiting, but I did say that we would potentially miss a 25 to 30% run up in price, but it was okay because we're trying to protect our capital. We had entered back here. We had fully entered. If you would have followed this right here, right around say 10,000, your return would have been pretty good. Maybe not the 4x or 5x that you were at, but you would have been somewhere around 3x, 3.5x, 250%, 300%, somewhere around there. You could have entered, exited a little bit sooner. There was something here actually that showed that this was the potential top. This is the the pi cycle moving average, and it actually on the daily, it's been pretty dead on. So it crossed. Where did it cross? It crossed right here on the 12th. And in the past, this pi cycle indicator has got the top within 5 days. So it got it on the 12th. The top was on the 14th. So if you would have used this indicator and actually believed in it and followed it, I'm not going to say I did, but my exit, it's not at these prices. I'm a long-term hodler. So if you would have believed it, you could have exited, and it actually did very well. Now it's diverging from each other. But what this is doing is just setting up for another cross in the future, and then that could be the ultimate cycle top, and that could be, if you want to actually take some take positions off the table, that could be the cycle top, because then after that we could be entering another year and a half to 2 year bear cycle, because essentially the bear cycle started. Nobody knows until actually it starts, but the bear cycle essentially started on in December 2017, and you could kind of say, it was ending here back in February. Um, so that's essentially 2 years, 2 years and a couple months. But then, we had COVID, definitely a swan event. And then, so you would say, okay, the bear market ended in March of 2020. So still about 2 years and a couple of months. So whenever that we get that next pi cycle crossing, maybe 2 years and a couple months from that, that's whenever, you know, we enter a bear cycle. We have the halving, we have the initial price run up into the halving, we have a little bit of sell off, and then ultimately we go into that next bull cycle for Bitcoin. So, but right now we're actually getting some good price action. This, we would wait to re-enter our positions once these moving averages start to move up. And I said we can come up to this breakdown where it broke down. These would kind of condense and kind of converge together, and then you would get crosses, and maybe it doesn't tell you to enter back in until you get back above the all-time high. But you would have, you would have missed it, but you would have protected your capital and entered in a time where you're going to see a breakout and more likely than not a return on your money rather than a large drawdown on your money. But everyone trades differently. You can trade off of this. If we look at the hourly on the 30 MA, because that's relatively good indicator to trade if you're doing short-term trading, that would have entered you in here and you would still be in it. It looks like it's crossing down here, but that's not a close below it. Right now, if you took this position, you would be up about 4%. Not a huge gain, but okay. Here we're on a 9. Look at that. We had the 9. I didn't even know that. So we had a 9, and did we retest it? We didn't. Not quite. I mean, we missed it by about $4. So I still think we'll go back up here. Retest is with a red number. So I would say that we're going to probably consolidate here for a little while. Tomorrow is Friday. That is the weekend coming up. We can look at the funding rates. The funding rates are actually still negative, which is good because this is, we counter trade this. So the market is net short. That's actually good for price. Yeah, we might come back a little bit, a couple percentage. But as a whole, this is good because we're not getting excessive longs here. We're not getting leveraged longs. It's been negative since May, so almost, a couple weeks. That's actually good. And on the weekly, it is also negative, so that's still good. So the market is net short. It would probably anticipate that it's going, price is going up and that we're going to fall down. So I think the shorts will actually stay around for a little bit longer. As soon as the market starts to give up and say that it's time to go long, that would be, really, really bullish because here we were short and then eventually it flipped up and then, it went negative. I hate that there's that outlier back in March. But yeah, you can see here where it went negative. And then as price rose up, eventually the market flipped net positive. We went net positive from November to basically May. So November, December, January, February, March, April. So 6 months. And then, we had a pullback. But for the most part, it went aggressively up. So this is actually good. You can see large net short. This took a little bit. That's how long this takes. So from March. So the COVID dump took essentially, March, 2 months to recover. This, like I said, 3 to 4 months potentially to recover, and then we'll see higher prices. That's what I'm looking at. The fact that we're the shorts, the market's net short. That's actually positive. I actually like seeing that. We can look at stock to flow model. So the stock to flow model was extremely close to actually being kind of tested, and as far as where we broke down as almost becoming not necessarily invalid, but potentially becoming invalid, where if we would have had a large price dump, there would have been a lot of questions. But currently, so it's 60, the model's right around 62,000. So if I take this number, I do 62,189, divide that by 2. That's where if we get a daily close below that, I'd be extremely surprised. So it looks like we're consolidating, and we're going to consolidate and potentially go higher, but we're still cautious. We can look at the RSI. I know the RSI had kind of recovered a little bit. 4 hour, it's, we're selling off. I mean, we did have a 9, so we're selling off a little bit. Nothing too crazy. It's expected 1 to 4 candle correction, potentially going back up. We can look at the CMF. As long as the CMF is kind of relatively trending up, we're okay. It's going down, showing a little bit of maybe sell pressure, but this is just on a 4 hour. Daily, it looks relatively good. We had positive bullish divergence as price kind of went sideways, and it's trending up, which is good. Weekly, it's still trending down, but it's starting to flatten out. As long as we stay above this 0 line, I think we're okay, and then we'll start to turn this up. Yeah, it looks okay. So that's Bitcoin. We can not the Bollinger Band. Wait, we can look at the Bollinger Bands. We're probably within them still. It's probably still okay. Yeah, we kind of tested the lower level, so we're below the middle, but it's okay. And then for the daily, we're kind of stuck in the middle, but that's okay. Hash ribbons. Oh wow, they're converging, which is crazy. But what we're looking for the hash ribbons to give us a buy on is once the moving averages, once the 10 and the 20 cross with our hash rate positive, we're going to get a buy signal. So it looks like our hash rate is recovering. We did have some China FUD that China was going to ban Bitcoin mining or have some heavy regulation. Hash rate has been did go down, and based on what I've read, miners are actually moving out of China. But we can see here that the hash rate is actually starting to recover. After that, we can look at the raw values. This is over a moving average. There's going to be a lot of noise here, but so for overall, over the past 7 days, we can see that mining hash rate starting to recover, which is good. So this is flattening. Once we get this 10 crossing this 20, that will give us a buy signal, and then they've been very good. So hash rates, hash ribbons, giving a buy signal have been very good. So you can look at this last one. It gave it here at whenever we broke the all-time high, and essentially, even if you waited to sell to today, you would still be up over 100%. If you would have sold at the top using potentially the pi cycle indicator, you would have been up over 3x, over 200%. So yeah, I did want to cover a meme stock. I did get in on it. I sold way before it actually ran up. The return that I got was around 20%, but I did know some people trading this, and I was looking at it. I got out. I took my profits. It can't be, you can have convictions with some trades, but sometimes it's just time to get out. So the CMF was, I got out this day. It was 20% return, right that day that it went in the 20s. I got stopped out. I set a stop. I don't usually trade without stops, but we had this down day here, and as price went up, we had bearish divergence on the CMF, which indicated that we would, it had this basically 100% day. I looked at it. I was like, oh man, I missed out on all those gains, but it is what it is. Over 300%. If I could have my stop, I literally got stopped out. It was like 8 cents. Set it just a little bit too high by 8 cents essentially. But I still think I would have gotten out way before this. I probably would have gotten out on before the holiday weekend. So either way, maybe it would have been a 50% return rather than a 20. But I would have not gotten this larger return because I would have seen this here, and I would have not trusted the weekend. And that day we came back, it did dump a little bit, but overall it stayed pretty strong. And so yeah, I mean, what I'm basically saying is that there's an indicator here, and you can even see it on the hourly. The CMF had showed as price was going up, CMF was going down, so that's an indication that there's more sell. That's bearish. The RSI had reached levels so high. You can also see here where there was also bearish divergence on that. And then here, if you would just have drawn a line sideways, I think the RSI got higher than it had ever been. Oh, it was high here, but you can see that, in the time that it had gotten this high, very rare, and it was followed by a sell-off. So there was a large sell-off. Buyers did come in. It didn't quite retest this area. Still think it's going to go down to 36. I still think it's going to go down to the teens. We'll see what happens. There's a lot of money going in this. Almost 1 billion shares had been traded, I think, yesterday. But overall, I don't think that this price warrants, the price of AMC. They've been closed. They broke the all-time high, but whenever something breaks the all-time high, pretty much the sky's the limit until it finds new support and resistance areas. But you can see here the RSI is the highest it has ever been. I don't think this is sustainable. The actual market cap of AMC had gotten higher than the market cap of GameStop whenever it actually had that big, $500 run up. It was more than like 30 billion. It was crazy, AMC. So yeah, that's it. It's 6. It can top on a 6. I can add this line here because I do think it's going to retest this area. We didn't quite get there. That's going to be an orange line. But I mean, it was tremendous run up. I was in part of it, happy to make, a return on it. Didn't get massive returns, but hey, what is it? Traders only take what they deserve, and apparently I only deserve 20%. So I'm okay with that as long as I made some money. What else? Yeah, so gold and silver. I looked at gold and silver. The Fed had released that it's going to start to unwind its balance sheet on some of the bonds and mortgage-backed securities that it had purchased to help stabilize the markets. They didn't say exactly when they were going to do it, but they're planning on doing it. It's a trillions of dollars on the balance sheet. I don't remember the exact number, but it was definitely more than $1 trillion. So they're going to try to unwind that. So you should see interest rates actually going up, and there are signs of inflation. I mean, you're seeing it across everywhere. Oil. I'll look at the oil chart real quick, but I mean, lumber did come down, but oil. I mean, things are just getting more expensive, and they're saying it's transitory, which means that means it's just temporary. But because of the circumstances that we had the last year, but that's not necessarily. I don't think that's necessarily true. I think we are going to see still, asset inflation, but whenever that came out, gold had already been extended a little bit. We were already on a 9, so I do think that this is potentially just a pullback. We had a 9 here. This is a sell-off. Can this go all the way back down to, 1831 to make this a red number and properly retest this 9? I think we'll consolidate. You can see the RSI, I think, was close to, no, it's weaker. I thought it was, yeah, it was overbought on the hourly. We actually had a 9 here on the daily. That would have been a good indication to sell. It didn't quite retest it on the upper end, so I can put a line there that it's still probable that we're going to get there. I'll make this red because this is the daily. Still have some upper targets here. We were within this channel. We broke down. We didn't quite get there. I'm going to go ahead and just hide that target. We got close to it. The weekly, did we get to it on the weekly? Oh, that was, this would have been, it missed it by literally like less than $3. So we didn't quite get there, but on an asset that's, essentially $1,800 it was pretty close. This is probably going to stand. But I'll still leave it on there for historical purpose because they didn't quite get there. So we'll see. We have a 9, had a 9 here. This is going to be support if gold does break down. This is overhead resistance. If we get a green number above a prior green number, that's a re-enter. So silver and gold kind of trade together. So I did, this is a retest of the breakout, I think. I still think we're going to get an upper target of 32, but at the moment, I had entered this position. I'd been in this position for over a month. I was in the green. I took, this is obviously, you can see here that this is resistance. This is the breakout area. Once we get a weekly close I would say above this 5, that'd be safer. Above this 9, we didn't quite get there. We missed it by like 2 cents, but we didn't quite get there. And I thought this week we were going to do it. We're on a red 1. I actually pulled out my position completely. I will be okay with waiting, losing, maybe potentially 2% in order to have, 15 to say 17%. Because I'm gonna wait and see. I'm gonna see if this pulls back. We can look at the moving averages because they work on everything. It's kind of flattening out. Want to protect the gains that I made, so just waiting. Wait patiently. We'll see what happens. I think once we get a weekly close above this 9 high, I'll go ahead and go in. Maybe say 28. I'll probably re-enter my position. Then maybe we'll go up to this 32. We'll get 15% return within a couple of weeks. But right now it's taking. I think it's taking a break. Gold had indicated that we had the 9. We had the 9 on the daily. I think we'll consolidate. We could do it for a couple of weeks or maybe a couple months, but then I'll reevaluate later. We can look at oil because it did hit that trend line, that historical trend line that I had been talking about for so long, but it actually needs to close the month. I mean, the monthly almost got there, so it was right at it, right here, and then we're above it. So this new month, so if we have 26 days, if it can sustain this will be the first time it actually closes above this trend line that has been established since 2008. So the weekly, I think we're on an 8. We could hit a 9. We could see a pullback. What's going on? I don't think I have CMF. I don't think there's CMF data on this. Oh, there is. Okay, so what's going on here? We're getting bearish divergence on the weekly. On the daily, it's kind of consolidating. We did hit. We're on a 9 today. This 8 will probably stand as the high. We'll get potentially 1 to 4 candle correction. We could retest this area. It's in a breakout zone. So what do we do? Okay, so we had a 9 here, consolidate. So yeah, I mean, but you can see this is bearish divergence. The CMF's going down. Doesn't look great for oil. Maybe we only have another week of high prices, but then we have a pullback significantly in oil of maybe 5 to 6% before the month closes, and then this trend line holds. But the thing about drawing trend lines, this is catching the close. This is catching the close. It catches a little bit of these highs here that look. I mean, it looks good, but the thing about it is diagonal lines drawn at an angle. They can be adjusted. It's locked right now. Let me, so if it ends up closing here, I can just basically do that, and that's still a relatively valid trend line. So you kind of, there's like some fudge factor in trend lines, diagonally drawn trend lines. So oil could technically get here, and then that's just a new point on the trend, and then we could break down. But as of right now, I'm going to leave it where it was. I'm going to lock it back, and then that's it. So even though we break out of here, it's not 100% definite that is the breakout. I would say that the breakout fully doesn't happen until oil gets above, probably closes above this 9. We get a green candle above prior green candle above this 9. And especially if it takes out this high of 76, then I would think we're going to see an aggressive move in oil, like an aggressive move, because you can almost see here that this is kind of a channel, or if not, this is a cup and handle, and the price movement here is significant. I say significant. It's significant for oil, so it would be $7. But it's already kind of broken out from there. So did we hit that target? Let's see. We might have already hit this target. No, not quite. I would say the neckline's here. Yeah, that's like $75. But did we hit the smaller target? Smaller target would have been this. And we're almost there. It'd be $70. So maybe This is an 8. So maybe within the next week or two, we get around $70. We hit that smaller target, but we'll see. I mean, if you have a position in oil, you're holding it. Because this could be, you know, I always said I don't know what could have broken this, but on a macro scale, but massive money printing and massive inflation could cause oil prices to go through the roof. And then, you have this larger almost pattern here, this larger little cup and pattern, cup and handle. But this has a huge price target. This is from 16 to 66. You would do not that much. You just draw the line because it's a dollar amount. So it would be something along the lines of, I mean, it'd be close to $100. Yeah, you'd see oil at $100 again. Energy sector, I mean, energy sector has been beaten up since basically 2008. So you would see, I mean, if there's areas of resistance that get taken out, companies are going to start rotating into energy, and you're going to see the energy sector go up. You're going to see interest rates go up, and you're going to see commodities and energy sector go up. You're going to see, I think, oil at $100 again, which is crazy, but possible. I did say something about the interest rates, the Fed unwinding its balance sheet. That's the plan. You can kind of see that we're still within this larger, long, macro channel here. That's basically been performing since 1994 of lower and lower interest rates. We were on a 9 on the monthly. I usually don't use the monthly. Let's see if there's something on the weekly. So we're consolidating. We have a 9, consolidation. As soon as you get a green number above a prior green number above this 9, you'll see interest rates break out. We had this 9 here, got retested on the weekly, on the daily here, retested. This could almost be a flag pattern where you have here, and then it's drawn this way. It's drawn this way. Kind of right here. Something like that. But basically the target is, if this breaks out of this trend line here, the target would be right here. It's the post of the flag. So you could see interest rates as high, a whole other percentage point, potentially, I mean, this doesn't give a time target, because this would just assume that the rise would be just as quick as the initial rise. But I mean, if it follows the same pattern, that'd be by summer of next year, you could potentially see. I'm sorry, this summer. By this summer, you could potentially see interest rates go up that high. And if there's a big surge of inflation, that's definitely possible. If numbers that start to get published, are enormous, you could potentially see that happen. But on a timetable, I'm gonna say, yeah, it's definitely possible. But we'll see. We'll monitor it and see. And we would still be within the channel. So, but that'd be a significant rise in interest rates. So I think that's about it. This went a little bit longer than what I wanted. We can look at these Bitcoin indicators real quick before I head out. We can look at mirror multiple bands. I look okay. It'd be nice to get this upper band again, right around 45,000. Price prediction, cycle repeat, just something nice to look at. That's at a little bit over $250,000 if it follows the last, the pattern of the last cycle. Stock to flow, it's kind of our price target. It's still saying over 100,000. Willy Woo's chart, the top indicator, saying right around 148. The cross asset Bitcoin stock to flow model, I think that's still pretty high. I mean, that's not going to change. Still $250,000. So we'll see what happens. We can look at this chart. These charts haven't been working. The heat map, yeah, they're not working. But here's the overall market. I know Doge had a little bit of a pump. It got listed on Coinbase. It's down 10%. Not looking too great. But Bitcoin dominance is still rather low, lower 40s. That did show a little bit of a bounce, but it hasn't recovered fully. Why is this not loading? I know I don't need that. I know TradingView has a do they not have a Bitcoin dominance chart? I guess everyone's working on their charts. There we go. I knew that. Yeah. So Bitcoin dominance is at 42 right now. Did have the 9. I think it would probably get back there. I mean, TA works on everything. It's definitely so the Bitcoin dominance is oversold. There's some bullish divergence here. We could see on the daily if there's it had a retest area. There is one all the way up here at 56. There's another one here at 60. So we'll see. So those are areas that are highly likely for it to go back up. Once it breaks out above, I would say 48%, it's most likely going to run back up to around 50. So it's recovered a little bit. Was severely, basically the RSI was severely over what would be classified as oversold. This was a specific asset if you could trade Bitcoin dominance. So yeah, it's just consolidating. There's not going to be a CMF on this, but bullish divergence on the RSI, and yeah, that's 4 hour. We can look at it real quick. That's going back up. Yeah, so it's just going down, just kind of sideways. So we'll see what happens. Looks like it could go down a little bit more, potentially going as low as 40. Has it? It's been lower than that, has it? No, the lowest it's ever been is 35. But it looks like it can get to 40 again, maybe over the next couple of weeks. If it has a red candle closing above a prior red candle above below this 9, it could definitely retest lower limits below 35 potentially. But it's been so oversold. I think we'll see a resurgence in Bitcoin dominance over the next couple of weeks potentially. So that's it, and appreciate it, and thanks for watching.